Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 1st, 2020. Just a quick heads up, I'm going to be away from my desk tomorrow most of the day, certainly all morning and into the afternoon, so there won't be any updates posted until I get back later in the evening or later afternoon. Starting out here, what I want to do is a quick update on the broad markets, not much to update, talk on gold, the US dollar briefly, and because of the covering the US dollar, I want to roll into another commodity, one that I haven't been covering much lately, but I'm keeping an eye on. And there are some developments worth noting, and that is lumber. So we're going to look at lumber. We'll look at the two ETFs that, although they don't track lumber prices directly, those are wood and cut. They track timber companies that are, timber and forestry companies, and they're going to trade similar. And then finally, we'll look at another closely related index, which are the home builders. And so that's how we're going to go through this video. Starting out here, the broad markets, really not much to update. There's that minor uptrend line we need to see go. It's well defined. This was where we were this morning. Actually, we were right here this morning. Put the post, we kissed the trend line again, and then yet another bounce. And you can see we continue to wedge higher. So that's it. You have the divergences still very much intact. The trend remains solidly intact without any sell signals. So that's what I'm waiting for there. Solid break of that uptrend line, that little wedge, and take us all the way down to at least this longer term uptrend line here, and then ultimately that 1127 level. 11274 level. That's NQ, the Nasdaq 100 futures. And for you QQQ traders, same story. You're going to see the same thing on the Qs. 60-minute chart. Flip over to that. There's your trend line right there. Still very much intact right now. It might look a little bit different from the futures. You get the round-the-clock trading in the futures that you don't see here. And so that's it. And until the tech-heavy Qs, because this is representative of the FANG stocks, until they break, the market's not going to go any lower. It's certainly, you're seeing underperformance in everything non-tech, but that's been the story for a while lately. So let's move on to some other things here. Okay, so quick update on gold. Gold, the story on gold is we had another successful test of this trend line recently, just last week, right there. Boom, test there, we tested it there, test there, and that's where it originates. So we're remaining above this trend line, but well off the recent highs, which we ran into long-term resistance. So far, stair-stepping lower, but more so in a wedge-eating type or triangle type pattern. 1997 was resistance, been resistance for a while on this chart, with the next resistance at 2029. But where gold goes will largely be determined by the dollar. So this rejection, we were right here this morning when I posted that at the 1997 resistance, and you can see if you look closely there, we were rejected off that level so far. Nothing big at this point, but certainly a rejection right there. And reason for that is the dollar rally. There's the US dollar. So let me turn on these candles. Something happened to my candlesticks recently. Logged on this morning to Interactive Brokers. My font sizes are 2 to 3 times what they were before, and the candlesticks have somehow changed. I'm flipped to a bar chart. It's going to show you the same thing, just a little cleaner. And this is the story of the U.S. dollar. Remember, gold is a dollar-sensitive asset because it's priced in U.S. dollars. At least the gold we're trading here in the U.S. and some other parts around the world. GLD, the ETF, gold futures, all that, they're priced in the US dollar. So if the dollar goes up, that's a net negative for gold and vice versa. So dollar's been in a downtrend for quite a while. I remain longer term bearish on the dollar, longer term bullish on gold, but near term, I think we may see a little bit more of correction here, especially if we get a breakout above this bullish falling wedge pattern. Here's your divergences right here in place. They continue to build here on the PPO from this point. We had a little divergent low there, another one there, and you had little pops each time. But so far, we've had a couple failed attempts to break above the trend line, and that's what we need to do. But yet we did make a reversal today, and we also took back, regained that previous reaction low. So you had a breakdown there to new lows and a reversal back above it. But again, we need to break this trend line. That'll be your next buy signal on the dollar. That should open the door for a move up to that 93-ish resistance level. Ultimately to that 93, almost $94 level. That's a big level on the dollar. So I think if the dollar futures can take out that, well, again, it goes one by one. Check mark there. If you break that out, then you want to look for this one. Check mark there, check mark there. And I'm still leaning towards that scenario. Should we get it, that's going to put further pressure on gold. So let's look at the euro real quick. Euro US dollar pair. We'll go to a 60-minute chart here. EUR USD. It's pretty much a dollar in reverse, and you can see we broke down from this little small wedge type pattern. We had negative divergence right here on the indicators down below, and there was your breakdown today. So this again, it's not mere coincidence. These things align. The breakdown there and the reversal after, or the drop in the euro after the euro dollar pair, I'm sorry, was correlated with that move down in gold. Remember, you're looking at the euro against the dollar here, so we're flipping the dollar chart pretty much upside down. And so when this pair falls, when the euro rallies against or drops against the dollar, that's going to put pressure on gold. So there's your sell signal, and you can see there's some additional support levels below. I don't have each and every level marked up on this chart, but I just wanted to say that that's what was the catalyst for the pullback in gold today so far. And like I said, look at that DX US dollar 60-minute chart. There's a potential for much more. I want to show you one other chart, and then we'll move forward. This is the long-term chart of the US dollar. This is on stockcharts.com. They give you the US dollar index on the end of day, so it's not reflecting today's move, but it's not a big move in the dollar anyways. The bigger picture here is the US dollar is at long-term support. This is a line I've had on my chart for many years. That's right about where we are right now, around that 92.14 level. You can see it was reactions back here, major reaction high right there. We broke above it, pulled back, tested, failed it, came to the next support level down below. Ultimately, I think this is where the dollar is going, and then some. It'll probably take that out, but we'll probably get a bounce first, is my guess here, because that again is long-term support. The initial tag of it, get a bounce, and then continue the downtrend. So this would mean if this plays out, of course, a little bounce here, bearish for gold, and then bullish for gold once the next leg down resumes. Okay, and this is the chart of lumber futures. These are random length lumber futures. To the best of my knowledge, you do not have an ETF that tracks these directly. You have Wood and Cut, two different ETF companies, as I mentioned earlier. They track timber and forestry companies. Now, obviously, rising lumber prices, just like gold mining stocks go up when gold goes up, and vice versa. When gold falls, same thing here. So let's take a look at this. First, I would just want to point out, as I said, the correlation. And the whole reason I kind of segued into this after coverage of the gold and the U.S. dollar. Lumber is also a dollar-sensitive asset. You can see right here. This is the U.S. dollar up top, and there was a major inflection point or a turn right there in the dollar with a downtrend that caused that sharp rally in lumber. And it's also not unusual for whatever reason. Supply demand imbalances, trend trades, strong trends, momentum trades. You sometimes get these parabolic advances. That's what that is. There's a parabolic trend line. There's a little mini parabola right there, and here's another parabolic advance right now, a big one. This is the biggest, most the strongest advance in many years, many decades actually, in lumber prices. Kind of crazy what's going on. And obviously, as you can see here, it was also exacerbated by the fall in the dollar right there. At this point, the dollar hit an inflection point, started rising, a new uptrend, and that put the brakes on lumber. So what happens is after parabolic advances, they typically don't end well and usually get some really big moves, that retrace a good part, sometimes even all of the previous advance. So I think there's a tremendous amount of meat on the bone for when the tide finally turns. Consider this more of a trade setup than an actual trade because we're still above trend, although I'm going to show you the 60-minute charts in a second. We actually just broke trend on lumber futures there. Extremely overbought, as you could just tell by looking at this run up, but the RSI will also tell you that. The PPO pinned up in nosebleed levels, making a bearish crossover right now, and that's that. Last time we were nearly this overbought was right here, and you can see what happened there. There was almost a comparable overbought level reading right there. Again, this is a weekly chart right here. No, I'm sorry, take that back, a daily chart, but same story. You get these big, extreme overbought readings, and that's usually when you get, you had a pretty sharp pullback there on that first one, but then we have a second one here. So that's the bigger picture. And again, tremendous amount of potential. I know a lot of you don't trade futures, and lumber futures are relatively thinly traded, so your options there are several. We're going to go over those. Cut is one of those. That's an ETF, again, that invests in timber companies. And you can see just a nice, clean uptrend line, bearish rising wedge pattern at really at a resistance zone. I should turn that level up. I have about 25 right there. A resistance level, and then 28.45 above there. So we're kind of smacked in between some pretty significant resistance. You can go back for a while and look at that. So that's the story of these guys. They've rallied, they're extremely overbought, and they've rallied into, this was a multi-year, or about a year and a half long trading range. COVID hit, everything fell, and we got back into it, but we're close to the top of that trading range now. And again, so that's resistance. And so there it is. You need a break of the trend line there, and that would be your sell signal. And I think that one comes back down to the bottom of the trading range at minimum. There's a lot of individual stocks that will have more bang for your buck. Home builders, especially. I'm going to go through a few of those, but that looks to be about a 13% drop from where we're at now. And of course, if we continue to wedge higher, if we remain in an uptrend, because I can't say that often enough, there's a big difference between an actionable trade and a trade setup. This would be a trade setup pending an objective short entry, such as a break of that trend line right there and that $27 support level. So maybe we go higher, maybe not. Wait for the breakdown and let's see. Wood, same story here. You have the multi-year. Remember, this is just a different ETF company holding a similar basket. Many of the stocks are the same. Some might be different percentages, but there you are. You're towards the top of that trading range. Nice, clean uptrend line, bearish rising wedge, negative divergence, extreme overbought conditions, etc., etc., etc. And looping back around to lumber futures, you can see, zooming down to it, this is a 60-minute chart, hourly chart right here. Well, this is the current uptrend line right here. There's our uptrend line. When you go down to a 60-minute chart, it doesn't appear, as a parabolic run, but it is certainly a strong advance. And you can put this nice clean uptrend line. You had negative divergence right here. There's your divergence right at that point. And we did break down, and we've fallen to right about the first support level, about 712.50 or so. And I don't see a whole lot supporting lumber futures if and when that 712-ish level goes until we hit all the way down here about 500. That's a pretty big drop. Let me measure it out for you in percentage terms from where we're at now. That would be about a 30% or so drop in lumber prices. Okay, in addition to those timber ETFs, cut and wood, a couple other ways to play and where I think you get more bang for your buck most likely would be the home builders. There's a couple of ETFs out there. XHB is one of them, the S&P Spiders S&P Home Builders ETF, and then ITB. ITB, I believe, is a little more of a direct play on the builders. Now, neither of these are an absolute direct play on the home builders. Why? Because they're chock full of other companies as well, anything kind of related to the housing industry. For example, Home Depot and Lowe's are major components in these, and so obviously Home Depot and Lowe's aren't building homes, but they benefit from that home renovation, new construction, things like that. So ITB, let me just show you the correlation here. If I go to edit chart properties, I'm going to overlay wood. I've done this in the past too. You can take my word for it that wood and cut nearly mirror the charts of lumber futures. Again, even though they're holding individual stocks, not lumber futures, they're holding the companies that benefit from that. But now, once I overlay ITB and in the charts, ITB and XHB are almost identical, again because they're tracking a very similar, nearly identical basket of stocks. But there's the relationship. You can't miss it. When timber prices are falling, home builders are falling, or when I should say the lumber companies, and vice versa. Sometimes you get a little heads up too. For example, here lumber prices continue to go up, home builders started to fall, and then boom, lumber prices got checked. Nice big reversal there, and there was more bang for your buck, especially at that point. And when I zoom in really tight, we're going to do that here. Let me turn this off, edit chart properties. Let's go down to a daily chart and take a look at ITB and some of the holdings, and then we'll wrap the video up. So this is ITB. There's your trend line off the lows in March. Everything fell off a cliff. I haven't really, you know what, I haven't cleaned this one up, so ignore these lines. These were past levels. Let's just take a look, mainly focus on the wedge there, the breakdown recently, and what I wanted to do is rifle through some of these leading stocks within here. Okay, so I've sorted the components of this ETF by market cap, which isn't necessarily, but usually coincides with the weighting that they're going to have in there. But again, not always right on there. In other words, this may or may not be the top holding, but this is Home Depot. It's certainly the largest by market cap in that ETF, so it's going to have an impact on the sector. And it's also a tell. You know, if you see Home Depot rolling over, that's usually going to be not good for the home builders. There it is. There's an uptrend line starting to crack. The common theme here is you have divergences on almost all of these stocks. You have these big moves. They're very overbought, extremely overbought in most cases. I'm going to go through the rest here, and I'm going to do it fast, just to kind of, again, paint the bigger picture. Here's lows, here's a trend line. So all of these are very close. Most are above trend. Some have actually, quite a few have already started to crack below trend, triggering sell signals, but they're not falling yet because birds of a feather flock together. If first of all, there's still that mania right now, the frenzy to buy the FANG stocks and tech stocks, and because the tech stocks, Apple, Facebook, Amazon, Microsoft, are also top components in the S&P 500, they're holding the whole market up. Technology is the biggest sector in the S&P 500, and you're going to see similar here with some of these big names holding up. You're not going to see the sector crumble, but what you can do, and what I'd like to do is, I go through and I draw trend lines on these, and I'll set price alerts. And when you start seeing the majority of these stocks breaking down, that's when it's probably a good time to start entering or adding to short positions in the sector. So there's lows, Sherwin-Williams, there's your trend line, divergences, overbought. Again, I'll just rifle through because there's so many I can't cover all the components in this sector. The video would go for an hour or more. There's DHI. So this is a home builder, DR Horton, breakdown. A bunch of red 6, follow through selling after the breakdown. So there's one that a sell signal has actually already triggered. Is it an objective short entry? Yes. Is it likely to play out with the sector not breaking down and rolling over in a lot of the other ones? No. In other words, what I think will happen, it's already broken down, and it'll probably continue to stair step down, but it's not likely to fall very hard until the rest of the sector breaks down. And where will it go? Again, these are old levels. I have not marked up all the charts. There's just too many here, but I'm going to tell you right there, I think that's a very likely minimum swing target, and that would be from where we're at this point in time today. That's about another 14.5%. So I do these videos because I'm looking for things that stand out with compelling, risk reward profiles, above average gain potential, and this sector certainly fits that bill. LEN, another home builder, Lennar, breakdown right there of the wedge, little kickback rally today. It recently broke out to new highs here at that 71.55-ish level. There was your previous high. So what we need to see now is a solid break under there. That means we'll have a false breakout, aka bull trap, and it'll probably bring us all the way back down here to the I'd say first stop would be right here. I can tell you that, around 66 or so. Again, the point of this video was not to get price targets on each and every trade idea, just to kind of paint an idea for the sector, but that would be 66 and then 56.81 if you wanted to short Lennar. NVR, I don't even have it marked up yet, but you can see common theme. You can draw these trend lines. You can draw the divergence lines on most of these, and same story, just recently broke out to new highs, but by a small amount so far, and move back down below there would be bearish, and then below the trend line would be even more bearish. MAS, Masco Corp, I believe I covered this one in building materials. See, that's, ITB has some building materials in there. It has, home improvement stores. It has home builders, a little bit of everything. PHM, Pulte Homes, another builder. There's your trend line. There's your divergence line. Same story as many of these. And waiting for actually, if I tighten it up right there, let's see, let me clean that trend line up nice and neat. Let's just give it the benefit of the doubt. We're close enough. It needs to go down a little bit more, and that should open the door for a deeper drop. FBHS, Fortune Home Brands, you can see, same story. It's your divergence line. And it goes on and on and on. Lennox International, air conditioning units, things like that. Watsco, not one of my favorite. Trex, covered that recently under building materials, still yet to trigger a sell signal, intersecting trend lines. Floor and Decor, Owens Corning, and it goes on and on and on. So I'm going to stop it here, keep this one relatively short. Bottom line is we're watching the dollar. So far, so good today on a reversal, but the dollar is still below the trend line there and has a little bit of work to do. But as of now, we do have an extension of the divergences that were in place beforehand, and we made the marginal new low, and so far a pretty impulsive reversal off there. So we see the dollar continue to rise, especially if it takes out the levels I talked about. That should be net bearish for the timber, lumber, the home builders. They're all again interrelated, and gold and silver as well, and the gold mining stocks, that is. All right, we'll wrap it up here. I'll get this video out to you guys. And once again, I'll be out tomorrow, at least for the first part of the day, and get back to any questions after that once I get back. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.